And in our top business story, the non-oil sector accounted for just over half the capital's economy last year at 50.2% of GDP. The real estate and financial services sectors accounted for an outsized share of the 4.4% growth of inflation-adjusted GDP to reach 734 billion dirhams. The figures have been released by the Statistics Centre Abu Dhabi in its latest annual economic survey, which shows that real estate activity accounted for the largest share at 20.7% of gross fixed capital formation in 2014, with the sector having grown by more than 22% during the year. The financial and insurance sector was second, with growth of nearly 20%. The Statistics Centre Abu Dhabi report added that the oil and natural gas production's share of GDP fell to 49.8% after adjusting for inflation, hitting 489 billion dirhams, down from 511 billion dirhams the year before. The Dubai Gold and Commodities Exchange and the Pakistan Mercantile Exchange Limited announced today that they have agreed to create a forum to work together, share information and bridge connections between the financial markets of both countries. Gaurang Desai, the CEO of the DGCX, stated that the arrangement will enable them to develop a better understanding of Pakistan's derivatives markets at a time when these markets are evolving rapidly and the economy is on a growth trajectory. He added that they believe this agreement will build upon the business relationships they have established in other Asian markets and provide an important foundation for the development of futures markets in Pakistan. Ijaz Ali Shah, Managing Director of PMEX, added that they see various similarities between both exchanges, one of them being that both are leaders in selling and trading gold in their respective markets. Good sales and marketing is the highest spending priority for small and medium companies, SMEs, in the UAE, according to a business survey carried out by business intelligence provider Mead. In a survey of over 150 SMEs in the UAE, spending on sales and marketing topped the list of priorities for respondents, with 63% saying that they will invest in this area to drive further growth in the coming months. Staff training and development came second at 42%. Product development and innovation is also a key investment priority for 40% of the respondents, while other important investment considerations include strategic partnerships at 39% and technology and IT security at 30%. Over 150 small business owners answered the Mead survey on investment plans, highlighting their priority investment areas for this year that also include improving customer service at 25%, recruitment at 20%, as well as enhancing workplace culture and environment at 19%. Mashreq has reported an increase of 5.1% in net profit for the first 9 months of the year to reach 1.8 billion dirhams compared to the same period last year. Operating income for the first 3 quarters was also up 3% year-on-year to 4.5 billion dirhams, driven by strong growth in net interest income, which was up by 10% year-on-year on the back of a 1.9% year-on-year increase in loan volume. Mashreq CEO Abdulaziz Al Ghurair made the announcement, adding that it is this balanced approach that has led to a decrease in the ratio of non-performing loans to gross loans to only 2.9% at the end of September 2015, adding that the bank has increased its NPL coverage to an unparalleled 148%. Total operating income for the first 9 months of 2015 was 4.5 billion dirhams, a year-on-year increase of 3% compared to the year before. Mashreq's total assets increased by 5.2% to reach 111.4 billion dirhams for the 3 quarters compared to the end of 2014.